So Nasdaq reached another record high yesterday, primarily driven by three catalysts. I would say maybe two and a half. Of course, the Fed cut rates on Wednesday, which is what, although initially saw some pullback, uh, finally ended up reversing gains. Although there is risks that I'm going to mention on that. And the Fed manufacturing index really surged, which was a positive indication for stocks. And also, that's why I say two and a half instead of three. We had probably two halves. One was the Nvidia stake at Intel. This partnership provided additional momentum, and also initial jobless claims that they actually reversed the 4-year um, low that we saw high we saw the last week, which was a positive indication for confidence, but I would say not a positive indication for dovishness, because of course when jobless claims are falling, it means that the Fed is right at being a little bit more cautious in being dovish. And with that, I want to mention two things here on the Nvidia-Intel partnership that it really excluded the Intel's foundry business, which has been struggling. Number one, and second, the jobless data. I think, given that the Fed really is turning to employment, um, the market, you know, maybe should have seen this as a downside signal rather than upside signal for equities, especially given that the Fed might have indeed increased the rate cuts this year, but they have reduced the rate cuts for 2026 just to one. Okay, this is what the dot plot says. And also, they increased economic growth as well as slightly inflation projections. So I'm looking at all of this Nasdaq upside with a little bit of cautiousness. And I have mentioned that we are at risky territory. A while ago, we have crossed above this open triangle pattern, okay? And we're heading towards this longer term trend line, okay, coming from back. I will show you, but we have a convergence of technical indicators as well as fundamentals here. This is a trend line back from November 2021. And look at this. We have come up to the 2450, the 138 Fibonacci, a very important level. And apart from that, I want you to also look at this. The distance of the triangle is very much done as well. So this is the measured move projection, not from the breakout indeed, but it is a 100 Fibonacci expansion of this pattern, which is again coming exactly at 2450. So the question is, combined with an overbought RSI that sees a second divergence, I would say even, since May, we have been kind of flat on the RSI, right? And we have been going up, okay? Are risks growing? And I think risks are growing. And I will tell you why I am a little bit more confident on the RSI momentum drying out, because also there is another indicator that tells us that this move to the upside is not really driven um, by volumes. If you see the volume oscillator, the volumes are actually 13% lower. They are below the zero line, and this is an alarming signal. Okay, obviously, as markets go up and the further we extend, volumes are not expected supposedly to be the same. But typically, we see an increase in the third move to the upside, okay, and the fifth largely starts losing momentum. However, we haven't really seen an increase in the third here as well, okay? So it looks like to me that everyone should be a little bit cautious. We also are in September. Guys, do not forget that September is the worst month in the history of the S&P. Of course, we're not talking about the Nasdaq currently, but Nasdaq typically shows even weaker performance than S&P. And although we have broken above this level, right, evidently, the question is this a longer term false signal? And the answer to this may be lying on the monthly chart. If we look at the monthly chart, we are indeed in September above that level. However, can you imagine that the next 10 days of September we see a crash? That would bring us to actually this in the longer term being a false signal because it's not really following with strong momentum or strong volumes when we look at the daily chart or even lower. Okay, so the question is, how do we play this out? Well, I think that the 2450 is a critical level, and I would probably might just go as far as saying perhaps we could go to 2475 and maybe even receive a rejection at this resistance before falling. So I would be personally be more interested currently in the short term, of course, to short the 2750. Okay, and that would come with, of course, a stop loss and target. Initial target, of course, that would be perhaps the 2372. Then you would go for 2273. Then perhaps even lower down to 2220. Okay. And of course, it really depends on how long this is going to play out. We cannot really know for now. We cannot really say for now. What we can do is once this plays out, is keep monitoring the markets for signals of a potential reversal of this new potential trend to the downside, to the upside. Okay, we don't want, of course, to you know risk a lot, and of course that also depends on how much of your account balance or equity are you going to put into this. But given that we could go with an entry at around 2470 or so, would be looking for stops, just practically speaking, above the 25k, perhaps to avoid and also a false break initial reaction as well. Just take it up to around 25, 25 or so. So you can see that this also has a great risk reward ratio, even if we take something like of an average. So it would bring us down to 260 multiple, 2.6 if we came to around the 2331. I will be, of course, focusing also on a potential bounce here at this level. What I'm thinking of happening is potentially a three-wave move to the downside, a two-wave move to the upside, and then a continuation to the downside. So this is how I envision this taking place. It doesn't mean necessarily that it will play out this way, obviously, but if it does come higher and we see a decrease in momentum, okay, so perhaps even let's go down to the 4 hour. We already see that momentum actually weakening, as you can see, and we have five waves to the upside. So if we see something like this play out with a maybe a second signal, who knows? What we want to see to the downside, we want to see five waves playing out. Okay, five waves means this is going to be an impulse. If it is an impulse, it means that we probably going to have at least another leg to the downside. So something like this would potentially play out. If we do get up to that level, we would take our retracement tool, okay, place it from top down to the first bottom after five waves and look for 50 to 61.8 retracement and then further continuations to the downside.